Hello, everybody. This is Parun Chada here from Passageways. And today we're going to get into an exciting topic. And I'm happy to actually have one of my friends, Kirk. You guys have actually probably heard Kirk on the various, different presentation circuits that he's actually really active on, or you read about him in Creative Times, Creative Journal, and now he's become an author in his own right. So today I have Kirk Drake from Ongoing Operations, the author of CU 2.0, a brand new book that was just launched a few days ago, joining me as a co-panelist. So Kirk, are you there on the call?
I am. Good morning, Tim. Thanks for having me.
Absolutely. It's a pleasure, actually. Me and Kirk, we go back, at least I would say a decade, and we've shared our individual journeys, over a period of time. We've gone back and forth. We started companies around the same time, and his experience has actually really been, something that I've actually learned from as well. So this is, this is a twofer for me because I'm going to learn more about, some of the topics that he's going to discuss. I've read the book. I have the book right here in front of me, and I also, I'm delighted at the fact that I'm going to actually get a chance to, see him next week at the QNAT Tech show, and we'll continue this dialogue at the QNAT Tech conference next week. So, most of you guys know, what Ongoing Operations already does. If you don't, you should check it out. He's the founder and the president of OGO, as we call it, which is a QSO. And that's a QSO that multiple credit unions have actually really kind of just come together to essentially outsource business continuity, disaster recovery, and a few other secure hosting related services. Managed telecom, seems to be something that they've added in the recent past as well. And so that's one thing that you should check out. An outstanding organization. I've had a chance to actually be at their client conference. All their customers, very deeply engaged. Kirk's also, of course, featured speaker at more than 100 conferences. That's the one thing that you remember about him. He's, very knowledgeable. Certainly, the right age bracket, if you will, because he's young enough to understand, where things are going. Still in touch with the, the younger developers, if you will. And certainly experienced enough to really kind of just lean on some of the new developments. And he's you're leveraging all of that not just to write but also share that as part of the speaking gig that he's actually really picked up. I have seen him speak several times, very engaging, and I think he's a little goofy as well on the stage, so that's particularly and then of course the book that he's written, I'm sure that this is something that you guys should check out. Strong recommendation here. I've done this in the past as well. I certainly think that every credit union exec should actually read this before you go into your planning cycle. I would even go on to say that this needs to be something that is actually really bought for your entire board of directors as well. So with all that said, I think this is going to be a treat, and I'm going to actually really at this point, essentially actually hand this over to Kirk and let him take it from here. Kirk, it's all you.
Thanks, Parun. Yeah, thank you. So welcome everybody. I can't say I've had the privilege of being told that I'm goofy on stage, but it's probably a little true. So I'm good with that and comfortable with it. So anyways, we'll jump right in. So the first question. Yeah. So I grew up a Grants Pass caveman, which is a small town in Southern Oregon. It's one of 3 schools in the country that has the caveman as our mascot. And while that's certainly odd and probably atones to why I'm a little goofy on stage, at the end of the day, this town was really formative in a number of different ways. So first off, this town, when I moved there in high school, had about 20,000 people in it and had about a 13-14% unemployment rate because the lumber industry in Southern Oregon had gone by the wayside in the late 80s, early 90s, and the town was really struggling. And so they did a number of different things that were pretty unique to try and revive that. And the town really, of course, clung on to that image and belief and town pride of this caveman, because the history of the town went back 150 years and was a very influential town in sort of settling Oregon in the sort of Old West days. And so as that sort of came to fruition, the town did three things to sort of help with this. So first off, they built a vocational jobs training program that took kids in their senior year of high school, and you would spend half the semester actually physically building houses so that you were trained for a construction trade. Another group of kids would do advanced welding techniques and components so that they could go do those pieces. And then a third group would do what was the high school bank. And so I got a call one afternoon on a Saturday from my high school business teacher who said, "Hey, Kirk, you interested in coming running this high school bank?" I said, "No, I'm not interested in that. I'd like to date. It's not really my thing." And I hung up the phone and thought that would be the end of it. My father overheard and asked me who called and suggested that I call back and take the job. And it began the journey of how I got into credit union. So next slide. So as that really evolved, it was a great experience in that I started this high school bank where we opened up accounts for students and teachers and faculty and everybody else to work on financial literacy, but at the same time, the idea being that I was getting hands-on jobs training, so the second I graduated high school, I could go work at the local bank. So the local bank ended up getting acquired by Washington Mutual, which of course is no longer. Kind of irony in the story. At the time, it was Western Bank and over the summers, I would go work at 30 different bank branches in all of Southern Oregon. And this was all pre-computer, so each branch had one computer, which in a high security or high risk situation, you can go look something up on, but otherwise was not to be used for much of anything. And everything was still sort of debit, credit, batch transaction processing. And by working in the 30 different regional bank branches, who had all been acquired through buying these small little town banks, I got this great hands-on experience where every single branch was a different experience and a different set of operations, a different set of security controls, and you start to get this really good picture. But what I remember most about this experience was the first week of training. We were sitting there, and it was sitting there in a room, and we're learning about Reg E, Reg D, Glass-Steagall, all the normal things you want your tellers to understand and know from a compliance perspective. And at the same time, the bank took a good 2 or 3 hours and broke that off and started talking about how awful credit unions were. And I didn't think much of this at the time, but they really focused on how they had this unfair regulatory advantage and how they're cooperatives and how they stink at service and just all this, sort of vitriol about how much they hated credit unions. And so, again, I didn't think much of it. I was, 16, 17 years old at the time. But it definitely sort of influenced the story, sort of long term. Next slide. So as I went through the summers, I would save this money in preparation for going to college. I moved to Washington, D.C., and had saved up about $1,000 thinking that this would last me through a semester, at which point I'd come back, work in the bank again over the winter break, and save up money for the semester too. Well, of course, since I wasn't working at a high school bank anymore, it took about 2 days, and I had a girlfriend in college. And then 3 days later, or 3 weeks later, I was out of money and realized that I needed to go get a job. So I did what every teenager would do at that point. I put together a resume, and I got the newspaper out, and I looked for all the jobs in the newspaper that were bank teller positions, thinking that I had this great 2 years experience. I should certainly be able to get a bank teller job. And I sent out my resume to probably 20 or 30 different banks in the Washington, D.C. area, and my phone call was crickets. Not a single phone rang. Nobody called me back, and I started to panic. So I went back a couple days later, got the resume out again, looked through the want ads, and as I was looking, I realized I had the wrong phone number on my resume, which of course which is why nobody had actually called me back. But this time I was too embarrassed to apply for bank teller positions, so I I went ahead and applied for a bunch of credit union positions. And one of those credit unions, next slide, was Agriculture Federal Credit Union, which was the USDA credit union, who hired me on the spot, put me in their, I spent 3 or 4 days on their teller line, and they were at least a real-time dumb terminal based system, which was hugely advanced compared to the bank that I was working at. But within the first couple of days, I was doing more transactions than the head teller. And so they did whatever credit union does at that point, and they moved me into the IT department. And I began my journey on the IT side of things. I ended up doing a core conversion there and running the IT department there at 19 years old, and then moved to Fiserv for a year to work there, and then came back to the DC area to work at NIH Credit Union as the IT manager, and ended up spending about 6-7 years at that credit union. All along, just getting this great experience of what it really means to be a credit union, how to help a member, why it's different, all the antithesis of what the bank, what Washington Mutual really taught me in that original experience. I really got to see the other end of that and really began falling in love with credit unions. The sort of real linchpin for that was, as I was at NIH and I was the CTO there, I came up with this idea for ongoing operations, which was a collaborative among 7 area DC credit unions to build a disaster recovery TSO. Today it's expanded. We work with 150 credit unions all around the country with multiple data centers. We host and do the production, all the non-member facing technology stuff for credit unions. So the IT security, the compliance, the patching, all the stuff that you don't really want to be doing, but you have to do, but doesn't actually make a difference to the member. And then along those journeys, so aside from the credit unions funding and investing in ongoing operations, they then jumped on the C Wallet bandwagon, which I was a founder or co-founder in with Paul Fiore, and that kind of gets us to today in the next slide piece. So as I worked on all the back office technology and all that front office member facing piece, I really realized that we kind of had a real gap in that, and we were missing some real things as an industry about how to build trust and loyalty and engage consumers online. You know, we live in this service first world, but we were really missing that piece. And so the book really, in this presentation, will really cover a framework of how to approach that for credit union. And I really wanted the book to serve 2 purposes. One, to be a how-to book, and then secondly, to be a galvanizing force for credit unions to use both with their management teams and their boards, so that you've got everybody on the same page, same language, same ideology, so that if the credit union really wanted to do that, they can move much quicker through that digestion of becoming a digital first credit union in that regard. Next slide.
Can I, before we actually get down to the meat of the presentation here, can I just quickly make sure that I say this? We will be sending a copy of the presentation to everybody. And so you don't need to make notes on the rest of the presentation here. You're free to do so. And we'll also be sending you a link of the recording. And if you have a question while Kirk is going through his presentation, please feel free to type that in the control panel, and we'll try and cover them as many as possible towards the end. And lastly, there will be a short survey at the end of the presentation where you can give us some sense of where you are relative to this topic, and that should take just a couple minutes at the most. That's it. Go ahead, Kirk.
Yep, thanks. So as I looked at this, I really looked at the current industry and said, we have this constant threat of regulation. We have new fintechs coming up every day. One this week or last week that got me really fired up was Square has applied to be a bank charter, to get a bank charter, and they're going to get into small business lending in a way that none of us as credit unions can even tackle. And then we have mergers going on. We're trying to do digital because we kind of glom on e-commerce, but we're not really doing commerce. What we've done is we've taken statements and we put them in a browser, and we've taken checks and we did bill pay, but we're not really selling people or educating consumers online and helping them make better decisions. And I think we have a huge opportunity there to do something very, very different. And so as I looked at that next slide, I said, well, why is it that I really love credit unions, and what is it that creates this sort of epic struggle? I love them because they always do what's right. They always put the member first. They always return value to the consumer, and they create great brands. I can't speak for great credit union names because there's, quite frankly, a lot of terrible credit union names out there, but the brands, I think, really stand for something. And then at the same time, they really struggle to create digital engagement, to tell their story, to build trust, and to use analytics in that mode. And those things really become important, next slide, as we go through and present this sort of full perspective, because when we look at the industry stats, it's kind of crazy, but 40% of members close their accounts in the first 100 days. And most credit unions have no idea or don't even measure this. And we spend a couple $100 a member getting them through the door, and they turn around and walk back out. And it's a huge example of where both the friction of joining a credit union or opening an account or a series of accounts, plus the experience isn't matching what a modern consumer expects. And that's a huge problem. Second problem in the industry, we've got, our aging population. Everybody knows this. We won't spend a ton of time on it, but the average consumer age has gone up 6 years over the last 30 years. And the one that really gets me fired up is we just went through the biggest, financial crisis since the Depression, and credit unions got all this goodwill. You had Susie Orman talking about, everybody in the industry is talking about them, but the culmination of all of that is 1% more market share. And so 6,000 credit unions together have 8% of the market. You, as an individual institution, you need 7% of the market to have pricing power, brand value, all of those pieces. And collectively, as 6,000 credit unions, we barely have that. Yet you see this constant erosion of credit unions thinking that if we get to $1 billion in assets, we will somehow have scale and somehow be relevant. Yet I would argue that the biggest fallacy in that is as we get to $1 billion, we try to look more and more like banks. And I don't really get it because I don't think looking like a bank is really our goal. So why? Well, a lot of credit unions say, if we're going to tackle this problem, we need to start with the normal things. We need to start with, go ahead, next slide. Consumer satisfaction, trust, convenience, and rates. But when you look at these in aggregate, our satisfaction scores are higher. Our trust, we're almost twice as trustworthy as a bank. Our convenience is equivalent when you add in things like co-op or shared branching. We have almost as many locations as any major commercial bank. The biggest one, Wells Fargo, has 6,000. And certainly from a trust and satisfaction perspective these days, we can certainly, beat them. And our rates are always better. So as I looked at that, and these are the things that Rad and everybody else has kind of always told us, I'm not convinced it's actually about these. It's not about service. It's not about trust. It's not about convenience. It's not about rates. There's a whole bunch of other things that it is about that we're missing. Next slide. So I came up with an acronym that I use in the book called the DREAM acronym, which we'll get into in a second. But it really started making me question, well, what is it about if it's not about service, trust, compliance, etc. And to me, I said, the modern experience is not being defined by a bank down the street. It's being defined by these guys. It's being defined by Amazon, Netflix, Best Buy, Uber, and Zappos. And their user experience, and hit the next tab, there's a bar that will come up, really comes down to these 6 pieces. They build these great digital experiences that are accessible across all different technology. They've layered in recommendations. So at every step of the way, you're getting social feedback. And it's something like 75% of consumers trust online feedback and recommendations more than someone they know, right? And so you get this great perspective where they're building trust by showing you what other people are doing, right? They've integrated the technology across the entire technology stack. It's highly customized and personalized using data to you. Amazon's not recommending, a spatula if you never cook. They're recommending things based on your prior buying habits and the things that other people with similar buying habits buy. And that personalization is really, really key because it's very off-putting and trust degenerating when someone recommends something that you don't like, right? And so that becomes a huge piece of that. And then most importantly, they do all this real time. And this is a funny one to me because credit unions have better real-time data than anybody else, and we don't leverage it at all. We don't leverage it across our marketing systems, across anything. We do everything sort of statically, and we're not really leveraging that to deliver a more personalized, better consumer experience at the end of the day. The best example, I think, of this that really changed this is if you look at Best Buy, who was really getting their butts kicked by Amazon. They went out and made their inventory all real-time, trackable down to the individual store, so that when you place an order online, they can tell you what's actually in the store and go pick it up. And I will tell you as a regular consumer, there's nothing more frustrating to me than when I go online and I look for something and I go to the store where they said it was and it's not there, right? And so that gap of making sure you're using that real-time inventory and changing that message is really key. Now, in credit union land, that comes down to, you know, the way you build trust in a home equity is making sure that you've mapped out the 27 touch points about getting a home equity for your member, and you communicate at every single one of them when things are going well and when things are not going well. So the member has full transparency and visibility into where everything is in the process. My experience at most credit unions is I apply for the loan, I wait 3 or 4 days, someone magically calls me, then they start going through the process, and I never really know where I am in the process until magically it's a hurry up and get everything signed. And so I think using that same methodology is really key here. Next slide. So as we look at that, this is where the DREAM acronym really comes in. What do we do about it? So I came up with DREAM, which stands for differentiate with data, repeat and reinforce through social media, excite and educate with content. Through content, we build trust, and we also, at the same time, optimize SEO and web traffic to drive members into that. We automate across all the delivery channels, not omni-channel, but marketing automation, so that we're highly effective at communicating where everything is in that process. And then we motivate, and this is probably one of the most important ones, we motivate by looking like a credit union, not like a bank. Stop trying to look like a bank. We don't want to be banks. Let's just embrace our local niche markets, our communities, and be more credit union, right? Demonstrate the value, and we'll explain how to do that. Next slide. So as we look at differentiation, this really comes down to data. And if you look at the Amazon, Best Buys, all the major e-commerce players, they use this entire chunk of data to figure out what to do next. They aren't just using Experian creditworthiness data. They're not just using next product to sell. They're using all of these in a cohesive manner. And they really come down to, you know, the first one, digital analytics. This one is key because you want to know what your member isn't looking for a car loan. They're looking for a car. They research on Google the type of car they want to buy before they ever come to the credit union and ask for a car loan. So making sure that you understand and see when your member is searching for these things, either through Google or through Facebook or something else, becomes essential for you understanding how to match and personalize that offer to that consumer. You have to do that profitably. It doesn't make sense to give people loans that aren't profitable, or to open accounts that aren't profitable. We are non-profits, we're not for profits, but we do need to make money. So making sure you understand that relationship and what services and value add you can add in there are key. You also have to make sure you've got wallet share, that you're really understanding the full potential of the member when you're making these decisions, because you're going to want to price those differently for someone who can take a home equity, a first trust, a checking account, CDs, retirement brokerage, all of those things. That's a different member than the one who's starting out and probably can only have a checking account and an ATM card. And so you got to make sure you're matching that type of stuff really effectively, and you're matching your service in that. Transaction triggers and if this and that are probably the most important to this in my mind, which is this is taking your real-time data and turning it into actionable things, so that when a member who's never shopped at Home Depot suddenly starts shopping at Home Depot, you are now going to show them ads, offers, educational content that plays on their interest and likelihood of becoming a first-time home buyer, right? Or you know, whatever those indicators are. There's a ton of them. But you really want to tie into those. And then your design data is really key at even understanding, you know, what are the things that your A members want, need, expect out of a financial institution, and customizing your products and tailoring them for those A members, because you want more of them, right? And the more you can personalize and make that highly niche for those A members all hang out together. They're going to bring other A members to the table if they've had that digital experience that is highly tailored to them, that gets their whole wallet share and gets them to become fiercely loyal members. They're going to tell all their friends and family, and that's ultimately what you really want. Next slide. So that takes us into the repeatable processes that are reinforced with social media. And in this one, there's sort of two sides of it. There's the piece that is, how do we build a process that is repeatable? Next slide. That is repeatable across all of your tellers and member service reps. And at the same time, is that ideal for a 100-day experience? Next slide. Because if we can get that repeatable experience, then we can reinforce it and make sure that the next member who gets that experience experiences the right thing. And what I really think is key here is you want to use Facebook and Yelp in that reinforcing process. You also want to use member ratings in that process. And so you can't shy away from that social interaction, because even if you just pretend that your Facebook page doesn't exist and your members aren't on it, they are on it and they are saying things about you, and you need to be able to engage in there. At the same time, that first 100-day experience becomes really key. Next slide. Because you want to make sure that your members are really driving at a process that you're under promising and over delivering. You think of the Zappos model. We'll tell you we're going to ship your shoes in 2 days and we ship you in 1, right? There's no reason in that first 100 days you want them to have this experience and be super excited because you did something that totally blows them away, because that's what's going to engender them and build that trust and get them talking about you on social media. Some really easy hacks here. Like, you know, we offer 3, 4, and free ATM transactions. On the 4th one, go ahead and give them to it for free as well. It only costs you 17 cents, and send them an email saying, hey, we just noticed you got your 4th ATM, you know, this month. We love you so much. We went ahead and waived that one too, right? It costs almost nothing to build in on the front end, but then you can use it as this wow, aha moment that gets the member excited, because while of course a $3 fee isn't any real big deal, for 17 cents, you can build all this loyalty and trust for doing almost nothing, right? So that becomes really key. Next slide. So as we look at that and we get into the educational piece, now it's really essential, because in educate and excite, we want to make sure that we are doing right by our member and helping them become informed buyers. And in this one, I would challenge you to go back and look and think of a time when you didn't go research something on Google first, right? And as you're researching something on Google, you're figuring out and knowing more about the potential offers and options for you than the credit union could possibly know about what your options are. And so we've moved to this buyer beware, from a buyer beware world into a seller beware world, where through Google, we can become more informed. And everybody wants to become informed. I always use the example of, if you go to a website and you don't see the price for whatever it is that you want to buy, you just go to the next website. You don't sit there and keep trying to do it. You know, so the Google traffic, the search traffic that comes in, becomes really informative for the credit union in helping educate the consumer, and through that education, you're building trust. And so you can start to see things that if a member read 17 blogs about home equities, they're probably a pretty good likely candidate for spending some extra time and making them an offer on home equities, right? Versus the person who's just looking for rate is probably just price shopping, and they may not be one that you want to spend as much time on. So it really helps sort of build and understand where to spend your effort and how to make a much bigger impact on the right members as opposed to all members in that regard. Next slide. So as we look at that, you start, let's say you went out and built all this content and you've got that out there, you know, that message and the ability to convey that message becomes really key. So in Ongoing's world, we wrote 500 pieces of content. We created 12 ebooks. And we went from, you know, our website we answered all these topics about random credit union technology things, because nobody else bothers to blog about credit union technology. So we have this great niche marketplace where we can get Google sending traffic for people who have problems that we solve. And then we run them through the funnel. And what it meant for us was, instead of spending $400,000 or $500,000 a year on a sales team and a marketing team, we wrote all this content, and we used to do 40 proposals a month that we would win 4. So we went and wrote all the content, built the call to action, built the ebooks, and now we get 100 to 150 leads a month, but we only give proposals to 10. Now, all the other interactions we're seeing as people download and use our content and solve their own problems are great. The people who aren't ever going to buy just self-educate, and they still get some trust in OGO, but they don't call me for things that they're never going to spend money on. But the ones who do, when we do, so out of these 100, 150 leads, we only respond to 10, but we win 8 of them. And so we're able to really qualify and understand who we should be spending time with and who we shouldn't. And the ones that aren't can just help themselves, which is great, because that makes us way more efficient. So aside from winning more business, we also were able to cut the amount of time we spent at conferences and trade shows and the rest of that almost in half, down about $250,000, and saved a whole bunch of money in that process and let the e-commerce side of it do all the work for us. Next slide. So as we look at that, then it really gets to automation. Next slide. And automation is, like I said earlier, it's not just about omni-channel. It's about using not this style of automation, but more interactions across an orchestration across the experience. Next slide. So marketing automation, there's things like Onnovative, HubSpot, Infusionsoft. There's tons of these out there. I happen to like a couple of them better than others, but they really allowed you to inject all the data points from all these different sources and then orchestrate those across the branch, the call center, the email blast, the direct mail piece, so that you can time this well. So one good example of this that we've done is with a credit union that I've worked with is we used some data analytics. We figured out that of their 40,000 members, 1,600 had home equities at a competing financial institution. And then we send the members 3 to 4 different emails about home equities, not selling them a home equity, but educating them on the home equity. So, what's the best way to use your home equity from a tax advantage perspective? What's the best way to, should you have a home equity or have a home equity line of credit or a regular home equity? And so a whole series of questions that are designed to get the member thinking about, best optimization, education, did they make the best decision, et cetera. And then after we see the members interacting with that, then we time a direct mail piece with an offer to that. And so we'll send them these 3 emails. We see how they interact with 4 or 5 different call to actions built into these emails. And the members that do react get the direct mail piece and continue that orchestration. And then as we see them move, the system is helping the member self-move through the process at their own pace. And the only time they ever get a phone call from the credit union is when they're super well informed and educated through the process, and we know they have a high likelihood of converting to the credit union. So of those 1,600 members, our hope is 800 click in the first email, or which is that would be insane. So the reality is we'll probably get a couple hundred click in the first email, another 50 or 100 in the second, another 50 or 100 in the third, and then of that pool of 300 to 400, they'll move on through a call to action. We'll get the offer in the mail, and hopefully we end up with 100 of those members switching their home equities over, but we're only spending the high dollars and the high touch on the top 100 best prospects. And so instead of the credit union sending 10,000 home equity offers out to 10,000 members, they're going to spend more per offer, but they're going to get a much better return on that and be much more qualified. And they're not going to waste their members' time who don't have home equity or don't even own a home, right, in that context. So marketing automation, next slide, really allows you to orchestrate that over the entire experience. So at this point,
we'll give you a breather. Yes. So far, what we are hearing here is lots of different, not just at a very high level, the strategy part of how you should be thinking about, but there's some good tactical plays that have been outlined, and I enjoyed the detail around each one of these pieces, the acronym that Kirk's talking about in the book as well. This would be a good time to actually kind of also think about the fact that not only are there so many different changes in the industry that you have to contend with, but there's also a sea change that's happening in just the way your employees actually really kind of view where they are. And this every business has to work with. In fact, employee engagement has certainly become a much more important metric to keep your eyes on, especially in the knowledge industry, in the service industry that we are in. And that's sort of been our experience. It certainly continues to see a lot of action. Passageways, if you guys already don't know this, we have one of the industry leading products for an employee intranet. This is sort of an application that allows you to keep all your employees on the same page and help in being consistently operating at at an efficiency level that will help you get to the 2.0 level. We have an extensive offering used by several hundred credit unions, so you certainly should check it out. But I should mention, as you're talking about marketing automation, this is a good example of how marketing and IT and maybe even some of your branch ops need to all actually really get together, so that you are able to leverage some of these new possibilities. And that requires you to be more collaborative as a workforce. And that's where some of these collaboration environments like Ensemble do help you. Next slide. I'm not going to really kind of give you all the details here, but certainly a lot of this is available. You could go to our website and schedule a presentation. But keep in mind that an employee collaboration portal like Ensemble certainly allows you to not just get everybody to be on the same page, but also really help you drive some of these initiatives that you have in front of you through dashboards and through making sure that everybody has the right documentation, policies, procedures, and all of that in your hands. So that's a quick reminder of one of the ways you can think about these changes and also really prepare your organization to be ready for those changes. On that note, I think I'm going to actually quickly toss this back to Kirk.
Thanks. So the last piece of this really comes down to motivation. And for this, I like to say, look like a credit union, not like a bank, and just embrace it. We are different. It is our competitive advantage. And the more we do that, the better we are. And so this one I think is particularly interesting in that I regularly hear from the credit unions. It's one of the blogs I always recommend sending in your sequence of member qualification or through your market automation is a blog that explains the difference between a credit union and a bank. And many people will ask me, well, why do I want to send that? The consumer doesn't care. And I would argue consumers don't care because they don't know on the first piece. And your A members do care, right? Your A members who are loyal and bring their book of business over absolutely recognize the tangible difference and believe in it. And so sending out the email, even if the member doesn't click on it, that tells you information that helps you gauge and target your future offers. Versus a member who clicks on that, reads it, clicks on the next one, maybe they don't take this particular offer, but a whole bunch more information, about really how to offer the next piece of this. So, I think that aspect of it is really essential for recognizing that difference is absolutely tangible and is relevant. So when I was writing the book, I really looked, I found a couple credit unions that I think are really doing an amazing job with this. One is Road Credit Union and one is Point West Credit Union. And I know there's a bunch others. And so, but as I looked at this, I also thought of cooperatives that are not in credit union land because I think they give us a good framework of how to think about this. REI to me is one of the most successful ones. They pay a dividend. They give you training and trips, and they train you and give you training and provide trips on things that aren't necessarily related to REI, but are related to their consumers. They have great return policies where you can return anything. Then they reverse those return policies, take all that stuff back, they give it to you as a garage sale once a year, members only. People line up at 3 in the morning to get access and buy these returned items at 40% off. And when you go in, they're not trying to sell you anything. They're just trying to educate you on this backpack versus that backpack. And they don't care if you actually buy the backpack that day. And their salespeople aren't commissioned. And I really love that as a model. And when you relate that over to credit union, Road Credit Union does something really unique here, which is they pay that patronage dividend. It goes into a unique account that you can't take back out. Once you take it out, you can't put it back. That savings account earns a 2 or 3% dividend. And then they plus sized it a couple years later and did a keep the change program where the extra 25 cents of each transaction goes into that account. And I kid you not, I've been around town where Road Credit Union is, and gas station attendants and random people have walked up and said, "Oh wow, Road Credit Union is fantastic. It's the first credit union, it's the first place I've ever been able to save money." And it's a really empowering thing. And the most important thing, I think it's only about 5% of credit unions pay a dividend. And I don't think you have to pay a big dividend, but paying a dividend creates a demonstrable feeling and differentiator for consumers that makes them understand the credit union difference, right? Because they're never getting that dividend back from a bank. And it's a huge way to do that. And there's all sorts of different ways to do that may be right for your credit union. But I think at the end of the day, whether it's paying the dividend or when you're doing, if you're trying to be relevant to your community and the training and trip side of things, if your community is going through a school bond issue, bring in a world's forethought expert on school bonds and the impact long-term on a community, and bring that person in, never even talk about the credit union, but have it at a credit union venue or do something, like that. And you will get all the goodwill that comes off of that. because people will recognize the value you're creating for them in their personal lives that is not directly attributable to the credit union. It gets to the I want a car, it's not a car loan side of things. So next slide. As we look at that and we bring that all together, what you really want to do is create this experience that gets your members to just always love you. Next slide. And by doing that, you're going to do that digitally first and embed the traditional brick and mortar in. And what I have found is that really engenders loyalty. And when I take that back to my roots of starting the high school bank branch, one of the things I didn't talk about was we were the most successful bank in Southern Oregon. They started 3 other high school banks. The other 2 each opened about 10 to 15 accounts. We opened about 150. We did that because I was a weird kid and I wrote a Turbo Pascal database program, and I took all the applications electronically and made it super simple to open those accounts so that the rest of those students didn't have to go through the same gyrations they did at the other schools. And by doing that, we opened 10 times the number of accounts in 1995 as what these other high school banks were doing. So I'm 100% convinced that building that digital strategy into the experience and making it super easy for the consumer across all these ways makes a huge difference in how we can be relevant to our consumers' lives. So with that, I think the next slide is the wrap up for me, but I think we'll move into opening questions. Yep. So as I stated, you want to differentiate with data, repeat and reinforce, educate and excite, automate, and then motivate across all your delivery channels.
Very good. Yeah, I mean, I think if this, this piques your interest, again, I'll go back to several examples that I found in the book that support each one of these, different important ways to really kind of think about, where you find yourself. I'm going to actually talk about one other piece, and there's a chapter in the book that talks about the board as well. But, this will be a good reminder. The fact is that most organizations, to bring about the kind of change that Kirk's actually really kind of forecasting here, that kind of change has to start from the top down. Certainly, your boards, it's a volunteer board. Most credit unions have a unpaid volunteer board of directors, and I think this is one of those one of those projects that you should think about. We certainly have a product called Onboard, which helps you automate your board meetings and really kind of digitize your board meeting experience, right from pulling together the book to actually having your meeting using the software. I feel like to bring about the 2.0 changes, you have to start from the top down. Your directorship, while they are volunteer, and there's a lot of dense information that you provide them, unless you get them organized and really kind of step into the future and really let them use something that gives them a sense of where things are going, I think it's pretty hard to actually see them make this leap. And getting the directors on the same page again is is an important part of what you have to do. And that communication channel has to be a board portal. Your executive leadership and your board, they have to be sort of aligned on this. We see a lot of the credit union boards have already made the transition. Some are still on paper. I strongly feel that if a credit union needs to become a 2.0 credit union, then they should actually really start with the board. Passageways Onboard is being used by almost more than 500 organizations across different industries, but certainly almost 500 banks and credit unions at this point. And this is certainly an application to worth experience, and there's a free trial that's available right on our website. It goes beyond just being able to really kind of deliver the board book electronically. It actually really helps you build the agenda, really keep things secure, allow directorship to make their notes and annotations, do your questionnaires, your board assessments. All of that can be done electronically, and of course e-signatures, approvals, all of that done online, which is easy on the directorship, easy on your admin staff, easy on the leadership, as well as actually really kind of just all aligned. Should you have any audit that requires you to look make available your official board record. All of this again in line with the 2.0 philosophy. We see a lot of organizations already embracing this, and there's a lot of information around it that's available on our website. So that's sort of at least what we have, and I should say that Passageways has these two products that we offer, Onboard and Ensemble, and Kirk and Ongoing Operations actually uses Onboard as a platform for their board as well. So with all of this, actually really I think we've covered all the content that we needed to, and we're doing pretty good on time. If we go on to the next slide and really kind of welcome more questions here, I would actually really at this point let Kirk sort of give us some more information around the book and what's the best way to get in touch with all this goodness that he's made available.
Yeah, absolutely. So the book is available direct on the CU 2.0 website. There's also a bunch of infographics and other content there. There's a Facebook group that's a secret Facebook group, so it's a great spot for credit union CEOs and executives to share their actual direct feedback and thoughts on these things without necessarily having to drive in and worry about those thoughts getting public. And then you can find the book on Amazon. Just put in Credit Union 2.0. There's a Kindle version, paperback, and a hardcover version. And you'll see there's a ton of great Amazon reviews out there, and it seems to be getting a lot of great traction.
Absolutely. All right. I think at this point we open it up to questions. So I am actually really kind of just we can take on questions here. Dan, are you going to be able to help us with the questions here? I would actually really if you're one of the audience members here, this would be a good time to really ask questions that Kirk could answer. This is a great opportunity. This is one of the foremost thinkers of our industry. You have a chance to really kind of understand from him, how he sees things, really kind of just shake out. Lots of experience, both as a chief information officer, as well as a CEO, serving a lot of credit unions. So, what questions do we have on this topic? Okay, so the question we have here, Kirk, what was the motivation in sort of writing this book?
Yes, so I think there was a couple thoughts. One of which was, a lot of the credit union CEOs and that I talked to said, certainly identified and recognized that this is an issue and that they could do a lot more here. And so I felt very strongly that a book, and being, there aren't a lot of credit union books out there, so having a credit union book that is kind of unique and focused on this really gives that unique perspective and helps the credit union CEOs, CPOs, CMO, whatever in that organization, have someone that is, they can put the book down and say, hey, look, you should read this, and it's not just them, right? They can expand that voice, beyond that very effectively. So that was probably the primary motivation in that. The secondary piece of it was just really hoping to give quick. I don't like it when I read books that are either super theoretical, that are great thoughts but don't give me any action items. So I wanted to make sure that there was like a how-to guide and examples where you can go into any chapter, pick out one or two things to try, and put it to market, and immediately have and see something that works, that's not hard, that demonstrates how this can make a difference, and that through the sequence of changes, sets you on this journey that allows you to go, change your credit union in this manner. So it was really both to inspire, but also to show you how to do it.
Yeah, and I should add, while you were saying this, I know that there are lots of, case studies that you've outlined in the book. And also, I like the fact that you had, you'd outlined almost at the end of every chapter, some easy ways to try out, whatever the chapter was about. So that's, pretty neat. What was I have this question for you. Why did you call it 2.0, creating in 2.0? What was the thought process behind that?
Yeah. So the thought in that mind was, I really do think it's a transformational shift in how we think about the business, and it's a different business model, because once you start, incorporating agile methodology into how to run it, you're using data to drive your decisions, and you're taking it away from the traditional, way we've run credit unions. I think it makes it all happen faster. It makes you more competitive, but it also allows you to be much more relevant to the consumer. And so to me, that 2.0 was, I want to keep all the great things that I love about credit unions, but I want to make them faster, more digital, and more capable of scaling up and having big impact on consumers' lives.
Good. That makes a lot of sense. So, again, I think we should move back to the slide which has the information about the book. While the audience is actually still here, we should actually really encourage them to go to Amazon, check out some of the reviews. So another question we have here is, since this is a fast-moving field, are there topics that you left out that you think have become important even since then?
So I think the biggest gap in the book, in my mind, is when it comes to the motivate piece. I think I need a lot more examples of credit unions who have figured out that local community feel, and so that's an area where I'm thinking a lot about of being able to demonstrate that and show some case studies there. Otherwise, I think writing a book is kind of this weird process where to be honest, the book's probably been done for almost 9 months at this point. I gave it the final go ahead in March, April timeframe, and then it's another 2 or 3 months after that before it kind of gets into the marketplace. So strangely, it's held up pretty well in its first year, in my opinion. There isn't a lot of stuff that I've kind of said, boy, I really missed that, or I really should have added this in the process. I do think, there are so many ways to do this that it's hard to put it all in a single copy. And it's an area that there will definitely be things more over time, like things like how do you react to something like Square, or more definitive case studies of, like I'm working on a blog right now, are 99 small data hacks, right? I'm up to about 50. So if anybody has any ideas, please email them to me. But that aspect of, trying to put enough useful things in there that people can jump on it and run with it is really key to me.
Mm-hmm. Yeah, absolutely. I know there was a lot of talk about, there's a mention about Bitcoin in there, and some of the cryptocurrencies. Lots of good information about that, and I think that's a topic that everybody is actually really gonna just know. Everybody needs to actually get more into that, because I've started to see sort of it's crossing the chasm, if you will. It's all around us. I see a lot more intent behind some of the business ideas, and I think you also actually really kind of just you and I, in fact, I remember recently we were doing a discussion on the side of a conference regarding artificial intelligence. So what are some 2-3 names of companies that you see out there that one should actually kind of just dial into and start following at this point?
So God, there's so many examples. One that I find really interesting is one called Biome, and what Biome has done is match gut level biology and tracks it over time, and then embeds artificial intelligence and machine learning in it to give you lifestyle changes and suggestions that are totally customized and tailored to you, on the predominant theory that for years our healthcare system has been built around triage and catastrophic events, and it's terrible at dealing with preventative maintenance. And if you build a company that's built around preventative maintenance, you would do it very differently than a triage-based system. And so it's a really interesting blend of a couple different things there. Of course, anything Elon Musk, related on the AI side, or any of his endeavors, I always find really, really interesting and a lot that we can learn from being able to apply systemic existing science to the same problems we've seen before, but do it a lot faster with a lot fewer people. I think there's a tremendous value that we can see as in our own credit unions of how to do that. I always like to say, if you were going to go back and build your credit union today with what you know now, you would probably build it and it would look very differently than how you've got it organized today. And that's who your competitors are coming in doing. On the fintech side, I think Square is a key one to watch. PayPal is a key one to watch, of course. And then I think you got to watch out for 1,000 others. So there is a Credit Union 2.0 or cu-2.com/fintech, I think, is a guide to about 400 different fintechs that we're tracking, and sort of shows them how they relate to different credit union income statements, balance sheets, etc.
Very good. Excellent. I think that's great information. It's time for us to actually really, bring this home. I know that there is an online survey that we'll actually really kind of just send you guys right away, and you can just, it's actually really just a quick, poll that we'll do. So we'd appreciate if you stick around and answer a few questions for us. Outside of that, you know where to go find the book now, CU 2.0, available on Amazon. And then you also know how to get more information about both Ensemble and Onboard. That's available on our website, and you guys can start, request trials and demos, as you get into your planning cycles and think about 2018 and onwards. So with that, I would like to thank, our team that's actually really helped put this together, Dan, Conoco, as well as certainly our star speaker here, Kirk. Both Kirk and I will be available at the CUNA Tech conference next week, I believe in Phoenix. I'm not sure. I could be wrong.
Yep.
Any closing comments there? We wrap this up?
No, thanks for having me. It's been a lot of fun, and look forward to seeing you next week, Poon.
Absolutely. Thank you, guys. Bye-bye.